Hey everyone, George Lorimer here, your home sold, guaranteed or I'll buy it. Talk to you today about a 1031 tax deferred exchange. So here's the situation. You own a rental property. You've owned it for a lot of years. It's gone up a lot in value. You've taken some depreciation and you want to sell it, but you realize, man, I'm going to have to pay a lot of tax consequences because part of it's gone up, capital gain, and part of it is I have to pay back the depreciation taken on my taxes. That's your recapture tax. They're taxed at a different rate. So come in the 1031 tax deferred exchange. We've helped customers with this numerous times, and this is how it works in essence. So you have 45 days from when your property you sell closes escrow. So your relinquished property, from the point that it closes escrow, you have 45 days to identify up to 3 replacement properties. And you have 180 days since that close of that property to buy a new one, okay? You can never be in receipt of the money. So if you're in receipt of the money, it blows the 1031 tax deferred exchange. So you have to get something called a qualified intermediary, and you want to make sure that they have insurance, that everything's done properly so that they don't abscond or leave with your hard-earned money, okay? So 1031 tax deferred exchange. So from when you close escrow on that property, you never receive the funds. It goes into a qualified intermediary account. Then within 45 days of closing on that relinquished property, you identify up to 3 replacement properties, and then you have to close escrow so that you own those within 180 days, and that's including the 45-day identification period. Now, things change from when this gets recorded. Your situation may be different, so of course, this is a big thing. You need to check with your CPA, your attorney, and all that stuff to make sure it applies for you. There are also some other options like TICs, tenants in common, some other investments on 1031 tax deferred exchange. Here's the big questions we get. You can go from a house to a condo to a house. You can go to a commercial building. Any type of property physically is fine as long as it creates income for you, okay? So that you're using it basically as an income property, that you're not using it to live in. You have to, in order for this to work, you can't buy one to live in. You have to buy it to re-rent it like you've done your current property. Okay, so reach out to me. I do have a free brochure that covers all the details, that outlines the inner workings of this, and I've helped a lot of people with it. I can also help you look at what your current property yields into what your new property proposed one would be, and maybe how that would benefit you to do that. So if you want that free report, just reach out to me, George Lorimer, 619-846-1244.